channel. Welcome back to another Sunday sector recap. We will go over our macro analysis for the week as well as some sectors and the S&P 500 or the E-mini futures actually. So moving on, this week here, the only thing of notes, we have Jay Powell speaking on Wednesday as well as GDP and GDP price index. That is going to be quite interesting, as well as our ADP non-farm employment. So Monday, Tuesday, slow. They have a few speakers, but nothing really cooking. Wednesday, like I just mentioned. Thursday and Friday here, though. Friday we do have our unemployment rate as well as our non-farm payrolls. And Thursday we have core PCE price index as well as initial jobless claims. And personal spending, which will actually be quite interesting as well. So this week it should give us a good sense of from a macro standpoint where the U.S. economy, in particular the consumer, and how they're feeling. So we will see moving on. And then just to get on even a week past that, we will have a core PPI as well as just normal PPI, as well as our non-farm productivity. So that'll be the following week, Friday, December 9th. So that's just some things we have coming up over the next 2 weeks. And then the week after that, I believe we will get CPI, if I'm correct. So moving into our E-mini futures here, and let's see what we have cooking. So as far as the E-mini futures go in the S&P 500, we are nearing the downtrend line. The area that I've been talking about for a while, which was above 403 into 410 into 415, right? And if you remember, I had boxes drawn for this area for quite some time now. We are near it. So the odds start to favor the short side, in my opinion, at least for the short term. Something funny that I think a lot of people just laugh at, but it actually does somewhat work a little bit, is pay attention to when there are full moons, as that's when price tends to bottom. The next full moon, I believe, is like December 7th or December 9th, which would kind of lines up for a pullback into, at least into the black line, which is right now it's 393, but generally it flushes under that, so maybe could get into 390, maybe the high 380s even. That's December 7th or December 9th, one of those 2 days. So it kind of lines up for a pullback. We are near a pullback, in my opinion, a pullback into some consolidation. So be on the lookout for that. The odds start to favor the short side up here. We've had a pretty substantial rally. And the market, in my opinion, is not going to bottom before the recession has even started, right? We did have a minor recession. We're out of that now, so now is the chance to double dip into that recession, probably starting next year. We might even be in it right now. But I saw a stat today that was like over the past 100 years, the stock market has never bottomed before the recession has started. So that leads me to believe, obviously, that there is still going to be some volatility. And although we've been spoiled with a really nice bear market bounce, at this point, what they're trying to do is draw in new longs, basically, that are going to be caught holding the bag for a pullback, probably into this range even, which is like this 383. I would suggest it's probably going to hold 375 for the time being, but you could see a deeper pullback into the 386, 385, and that could give way to a decent rally back up to 4,000 into year end. So that's not completely out of the question. So let's move on to our sectors. Actually, some really nice breakouts on a lot of these names. So I'm actually going to take off the envelope here. Just you can really see how prices move. And this is XLV. And could it be trying to put in another shoulder up here? I'm not sure. Maybe. So it still looks like, although these are obviously, this is not the time to buy after you just had 1, 2, 3, 4, 5 straight green days and pretty much a straight up price action. That's never when you want to buy. It's when you actually are looking to sell generally. Moving on to XLU, really nice bounce off the bottom. It's gone a long way here though, so it's not quite overbought, and the squeeze meter looks like it's trying to cool off here. So really nice push off the bottom. But let's see, moving on here to XLI, you can see that it did break out and we're working into overbought here as well as into some supply, right? It's actually probably sitting in supply right now. There's more supply up here at 103, 103.50 area. So although this was a really nice bottom, this is the industrial sector. So if the economy slows, obviously building will all slow. XLE Energy holding on, but in my opinion, it's about due for a pullback to the trend line, which it's been bouncing and working off of. That would bring it all the way back down here to 77. And oil, in my opinion, looks like it's nearing a trend line. We can get into oil after this, but that's my thoughts on that. This is real estate. Real estate, in my opinion, is not done rolling over. I kind of see it working in this wedge, really, is what I see. Um, so, in my opinion, it's getting close to, when it's probably going to make another leg lower, if I had to guess. XLY. And by the way, these are some of my favorite plays: rising wedges, falling wedges. The reason being is the moves tend to work the quickest and they tend to be the most violent when they do break. So that is something to watch. And if you're seeing, something like this set up, this is XLR or XLRE. I have personally sectors, right? So here's my real estate sector. I have 4 stocks in each of these sectors that I can watch and that I can play. So here's CCI. You can see how the setups are similar. This was DLR. Some fare better than others, right? SPG. A one that bounced like this off the bottom is probably not one that I would look to short because it's a pretty strong name. But a name like this, which just barely moved off the bottom and still below a key major pivot, as well as this is what I would call a multi-week head and shoulders top. This thing probably gets back down here all the way to 110 maybe, which is about 30 bucks from here. So let's get back into it. XLY, nothing really cooking there. This is an interesting one. Financials. These kind of shocked me. I'm not really sure what's going on here. It looks like money is rotating into financials though, if I had to guess. As well as XLP. Money is really coming in XLP, the consumer staples. We talked about this breakout on the weekly chart, right? We talked about it last week when it closed right there. And it's attempting to break out. Now, if it gets over this $77 range, this could be cause for a little bit of a squeeze and could push price higher, maybe even into all-time highs. That's not out of the question. That's something you should be watching for. Materials. We've talked about this, but with China locking down, their COVID protocols are pretty strict. So if those were to loosen up, although I don't see an end per se to their policy as of right now. If this was to end, this will hit new highs very quick. And that's going to add to the inflationary pressure, which it has started cooling. Although has it really topped yet? I don't know. I don't think anyone knows the answer to that question. But if China were to reopen, you would see materials, you would see commodities all pick up steam and rally, and crude would be back at previous all-time highs pretty damn quick. So that is the catalyst for materials, for commodities, is China reopening. That is the single focus for commodity traders right now, focused on that. So, pay attention to news as it comes out on stuff like that. But so here we got XLC, the communication sector. I've said many times I don't really love the sector, but I have started to see money starting to flow in down here. There are some names that are discounts per se. Discounts, right? It's fallen, 80% off highs. Let's see. So it's down about, if it's fallen 50% off highs, it could fall another 50% from here. So that'd be pretty catastrophic for the sector probably. But I'm not at all bullish on the sector. Moving on to software. Sitting right here on previous COVID highs. This is one of the names where multiples have started to come in on a lot of these names, and I think there's a lot of value in some of these names, these software ones, particularly B2B, business to business names. So pay attention to that. Obviously, I really like Snow, Unity Point Software. They're another one that I'm quite the fan of. XLK here, Tech, actually has been one of the slower bounces out of all the sectors off these recent lows, and still has some room up. So if the S&P does push into the 410, 415s, Tech is going to be the one that leads. Tech is notably strong during this time of the year into December, so that is something to pay attention to, something to watch out for. And last but not least, semis. We are at resistance here. I have, as you can see, an alert here set for a break below this 213 level. If we break 213, I think this thing probably back into the 190s pretty quick, into this area, maybe 195 and below. So that's 213 to that's about an $18 move. A lot of these names haven't quite retraced all the way to COVID highs. That's, in my opinion, still coming. A lot of people believe semis are growth, and they do have a part of them that is growth. However, they are cyclical, right? Meaning that they perform based off of how the economy is doing. A lot of people forgot that when we saw stocks like Nvidia absolutely blow up, go berserk, right? But the reality is they're cyclical. So if the economy is slowing, their business will also slow. So there are some safety in some of the bigger names, right? But even names like Nvidia, who in my opinion has put in probably a long-term top for the next, at minimum 5 years, but it could be significantly longer, could be 15 years. So that's kind of where I'm at with semis. I do believe there probably will be the ones that would lead another leg lower if we were to do that, which in my opinion, we are going to do that at some point. Although it could be, pushed back to start in January, right? So that wouldn't surprise me at all. I personally don't really believe that we make a new lows this year. I think we're probably have put in the lows for the year, but like I said, come January, a lot of stuff can change. So let's look at crude too here, just because I think this is an interesting chart. And like I said, the bullish catalyst on crude is China reopening. So we're close to this trend line on the weekly. This is what I was kind of paying attention to. So that's about the $70 base. That's where it's going to find, in my opinion, quite a lot of buyers. This is about the level where Biden said that they'd start refilling the strategic petroleum reserves. So that could be really, in my opinion, when he said that, he put in the bottom. That was actually about here, and it bounced up off 74, 75 bucks. And now we're here. So that's kind of what I'm thinking. Dixie, this is another interesting chart. This is a 4-month chart. Let's pull up a 4-month chart. And you can see we're finally starting to reject on Dixie, which is a good thing for stocks. So this is the quarterly. So this doesn't end till the end of January, looks like. So we'll see on that one. This is the monthly though. We will see if it gets bought up. If this monthly is, so 3 days, if the monthly closes above the September lows, they would have trapped some shorts, and that could be gas to push it back towards 120, which I know a lot of people believe that we can get back to 120. I don't know, maybe. I'm not going to sit up here and act like I do know, but for right now, the candle is attempting to be bearish. But it's been a really nice technical cool down for the Dixie, right? Obviously, as the dollar gets stronger, meaning if the dollar pushes higher, stocks generally push lower. If the dollar were to sell off, stocks, in particular tech stocks, would like that, and they would push to the upside. So that's what I have. I appreciate you guys watching, viewing, subscribing. As always, if you have any questions, please feel free to let me know in Discord as well as in the comments. So I'll be back with more videos. Peace.